Hi everybody, I'm Dan Pilla, tax litigation consultant and author of 14 books on dealing with the Internal Revenue Service. And today I want to talk to you a little bit about tax policy. You know, over the years, I've done a great deal of writing and speaking on tax policy, not just IRS procedure, how to handle IRS problems and how to solve IRS problems, but I've done a great deal of writing on what we have to do to revise our tax system and fundamentally reform our tax system into a tax system that makes some sense. And so I want to talk to you about tax policy a little bit today, because over the last couple of months since the midterm elections, we've had a lot of static out there about what's going to happen with the Internal Revenue Code now that Democrats have taken control of the House of Representatives. And in particular, what we see here now is a situation where Representative Richard Neal, a Democrat of Massachusetts, has been named the chairman of the House Ways and Means Committee. The House Ways and Means Committee is the chief tax writing committee in the United States Congress. You constitutionalists out there know that all bills with respect to revenue have to originate in the House of Representatives, and the Ways and Means Committee is the committee of the House that writes these bills initially. So now we've got a Democrat in control of the House Ways and Means Committee, Richard Neal, and okay, that's fine, but what has really caught my eye here over the last couple of weeks is the new assignments to the Ways and Means Committee. There have been 10 new Democrats assigned to the Ways and Means Committee, and again, that's fine too. The Democrats have taken control of the House, and so that's expected to happen. But 5 of those new members, friends, are members of what they call the Congressional Progressive Caucus. This is approximately 100 members of the House of Representatives are members of this Congressional Progressive Caucus, and this is the far left wing of the Democrat Party. These are the leftists and the Democrats that are pushing the socialist policies that are shaping the debate in Washington these days. Now, those 5 new members, Don Bayer of Virginia, Dwight Evans of Pennsylvania, Stephen Horsford of Nevada, Gwen Moore and Jimmy Panetta of California, they've joined the existing Ways and Means Committee, and others on that committee have also are also members of this Congressional Progressive Caucus. So that begs the question, what is the committee going to be doing about fundamental tax reform and about unraveling the very positive provisions of the Tax Cuts and Jobs Act? We have to wonder. I wonder, frankly, whether they're going to be spending any time on substantive tax policy at all, because the Democrats have made it clear, and as a matter of fact, there's already been a bill introduced in Congress, H.R. 1, to require the president to turn over his tax returns. So it seems to me that the Democrats are going to be more focused on going after the president than they are on shaping fundamental tax policy and sound tax policy going forward. I really believe that that's what's going to be going on here in this next congressional session, because they're more concerned, as I said, about chasing the president than fundamental tax reform, and Lord knows America needs fundamental tax reform. Now, as further evidence of the direction they're heading, we're seeing these leftist Democrats that are radicalizing the debate and putting the Republicans into a position where they have to respond to these radical policy proposals, which always lead them to compromise in favor of the left. What I'm talking about here is the most recent, it's hard to say proposal, but the ideas that are floated here by Democrat leftist Congresswoman Alexandria Ocasio-Cortez. Now, she produced a plan. It didn't produce a plan. You can't call it a plan. She's produced an idea and has floated an idea to raise the top tax bracket to as high as 70% on income over $10 million. And she wants to assert this tax increase for the purposes of funding what she calls her Green New Deal. And this is her plan that would supposedly eliminate fossil fuels by the year 2030. Just 12 years from now, she proposes to eliminate all fossil fuels in America by imposing this tax. Now, she says, and well, she doesn't say, but certain analysts at the Washington Post claim that there would be an estimated $700 billion raised over 10 years by Ocasio-Cortez's plan. But the fact that, but let's set that aside for a second. Let's set the 700 million aside for a second, and let's say this: even if that were true, even if they did raise $700 billion in 10 years, experts tell us that it's going to take several $trillion to decarbonize America. And so even if she did get the money, it's not even going to come close to what it would take to achieve the goals that she thinks she wants to achieve. But now let's talk about the numbers. The fact of the matter is, friends, that the Washington Post made their estimates of $700 billion based on static scoring techniques as opposed to dynamic scoring techniques. And here's what I mean by that. Every action has an equal and opposite reaction. We know that. This is true in economics. It's true with tax policy. When you impose taxes, cause distortions in the marketplace. A distortion is what is the term that economists use to describe the impact that taxes have on the behavior of people. Taxes cause you to do things you might not otherwise do, or they prevent you from doing things you otherwise would be inclined to do. And so when you impose a tax, you have to take into account dynamic scoring to figure out how much revenue that tax is going to collect. Let me give you an example. Suppose you imposed a tax of 100% on everybody's income. Well, you'd sit down and you'd say, well, look at all of the income in the United States is worth X trillion dollars. So if we had 100% tax on that money, the government would collect X trillion dollars. But that's not true, because if you had 100% tax on everybody's income, people wouldn't work. You see, that is a distortion. The tax creates a distortion. It creates a condition where people do not work for nothing. They will not work for nothing. And so if you've got 100% tax on income, you're not going to have any income. So this is why you have to have dynamic scoring in your tax analyst as opposed to static scoring. So when we apply dynamic scoring principles, the Tax Foundation tells us that if this 70% tax bracket applies to both income and capital gains, the federal government would actually lose about $63 billion in revenue over 10 years, because the fact is high-income people in this income bracket that Ocasio-Cortez is talking about, most of the income earned by people with that kind of money is earned through capital gains and dividends and stock transactions and so on. So if you tax all those at 70%, you're going to lose revenue, not gain revenue through the policy. On the other hand, if the tax only applies to ordinary income, wage income, or business income over $10 million a year, then the Tax Foundation estimates that the collections are going to be more like $292 billion over 10 years, a long way from $700 billion. So friends, this tax policy is unsound, and it is not going to achieve the results that these advocates say they're going to achieve. The only thing that confiscatory tax rates achieve, friends, is the destruction of capital and the imposition of a lack of will on the part of the people to work for a living. That's all that happens. So what I want you to do is you can check out my tax policy writings. In particular, my paper called The 10 Principles of Tax Policy, which is available at my website, TaxHelpOnline.com. That's TaxHelpOnline.com. Thanks for listening, and we'll see you next time.